Good evening, everyone. Am I audible? Good. Thank you. It's a pleasure to be here back on the stage. So friends, we have been discussing various layers of artificial intelligence since morning, how the BFSI companies are using it efficiently. And we discussed it with CIOs, CTOs, and yes, Rajuji is here. As we start, so friends, once again, it's a great evening and it's a pleasure to be here on the stage. We discussed a lot of layers of BFSI since morning. You heard the CIOs talking about different aspects of artificial intelligence, CTOs, CDOs giving their perspective, tech practitioners also talking about how they are efficiently using AI. Now the big question is how the CEOs are looking at AI, what is their perspective about AI, and more importantly, how they have added AI in their playbook. This is what I will try to learn from them and try to understand specifically for you and me in terms of what is going to be their rule book. So to begin with, I have a very basic question on a lighter note is, how many of you are using AI and which is your favorite prompt? Rajuji, let me start with you.
Firstly, thank you for having me. I think AI is in a sense embedded into pretty much everything that we're doing today. It's really about adoption. Getting the larger organization to use this for all practical purposes, like your executive assistant, which many in the organization don't have. I don't have a favorite prompt.
Sure, I thought your prompt will be how to increase the deposit base for the banks. Mr. Ghosh, what is going to be your prompt? I know your prompt will be more about the human side because you don't believe in technology more, but please add a quick sentence.
We used more in a old AI, not in a new AI. Old AI, Air India. Not the artificial intelligence. Till now, we are watching on that. It should not be the same.
Right.
So we are very much a comfort with the high touch.
Sure. Ravi?
And thank you.
Yeah, we'll come back to the main questions.
My favorite prompt is, how can you help me reduce my golf handicap?
Oh, interesting. Ravi?
Yeah, I guess all the Gen Z words which come up in a WhatsApp message,
okay.
You try and find out from Gemini or somebody, help us here.
Okay, so TTYL and all those words, you try to find the meaning. Okay, interesting. Alok?
I use Copilot a lot to summarize my emails.
Oh, interesting. Which you write to the IRDI?
That you don't ask to whom.
Sure. Ankur?
Hi.
Yeah, it's working.
Hi. So before I tell you my favorite prompt, I'd also like to introduce myself. I'm Ankur Rander, founder and CEO at Bombay DC. We work with leading financial institutions and businesses in the country to drive growth through digital. And I'm on this panel because I will speak for the customer amongst this room full of BFSI professionals. Right. And I'm going to bring that voice. I have spent 15 years working at the intersection of customer behavior and technology, starting from designing Toyota's driverless car in Japan to digital experiences in India. Thank you for that. And my favorite prompt, I think, would be honest.
Okay.
That's what I tell the AI after every conversation.
Okay, the humans are telling AI to become being honest. Interesting, Ankur. So let me shoot my important questions to all the CEOs here who are trying to navigate through the geopolitical tensions, uncertainty, dealing with different world of deposits, catering to a different age of customers. So my question to all of you to begin with is, what are your priorities today? What are you preparing for? And this question has a background of geopolitical tensions, continuous uncertainty, private capex, deposit issues, and everything. Rajuji, I will start with you.
I think the level of uncertainty that one is dealing with is quite phenomenal, and everything that you mentioned is appropriate. You forgot about waiting for Mr. Trump's tweet in the night and how that's going to change the world. and really you're looking to build a business in that sort of an environment. And I think as a CEO, it becomes very important for you to disassociate yourself from the noise, because ultimately you're not building a business for tomorrow, you're not building a business for this quarter, but over the next decade and the next decade after that. And I think what some of us who are slightly older have realized is change of this nature, whether it is in terms of technology, customer expectations, is a continuous process. I mean, I come from not my generation, but one generation before, where people used to take 1 day bank leave. They should take 1 day leave to do bank work, as it was called, to today where everything is being done on the mobile app, and tomorrow it'll be conversational banking and so on and so forth. And so therefore, really the challenge ahead of you is to figure out how technology is going to change customer expectations. And in that sort of an environment, how are you going to continue to stay relevant to customers? I think as a CEO, that's really what keeps me awake.
Interesting. Mr. Ghosh?
I am looking that the decision, of course, we will be like to analyze the risk of the business. And there are two types of risk we see that. One type of risk, that the systematic risk. We know that oil price will be like to come up, come down. And so this type of, or many times we can see that the dollar price will be like to come up. This is one type of systematic risk. So I feel that that we are like to cover by the strong governance system, and the regulator will be like to time given the guidance, will be like to follow on that. So that can be covered. But a non-systematic risk, Lehman Brothers, COVID, war, and that is we are not know that when it will become and how we like to cover it on that. The only the point on this, the second part, whatever we are talking about in all that, whatever we are fear in the time of Ukraine war, we are less fear about when the Iran war, because that time will be like to what will happen, know that, but we know that what is happening now on that. So in that sense, we have a need on that, how we diversified the business model on that. As India, as a big country, opportunities is more. Going to the large number of population, grassroots level to top level, if we diversify of this, the business model, how we reach them to give the more service, I hope that type of challenge or risk may be not like to create a big problem for India. We have need on that, the diversified and very well risk mitigate system will be prepared on the basis of use of IT, AI. It can be helped us on that future growth on this banking. Thank you.
Noted your point, sir. Mr. Ravi?
Yeah, so, when there is immense turbulence, the idea is not to focus on the storm, but to, batten down the hatches and kind of recalibrate your instruments, right? So I think broadly speaking, the idea is to ensure that when there are these macro headwinds, how much of micro precision we can get into our system. And that is what typically one would like to do at these times, like Rajiv and Ghosh Saab said. I think if one were to look at the way in which we are configured, we are predominantly a rural enterprise. 70% of our distribution is in the rural market, and some of them are real deep rural market. So in that sense, there is a Japanese word, I am a Japanese company, so the Japanese word is gemba, right, which means the battlefield, where the rubber hits the road. And that is where we focus on in terms of ensuring that during these problematic times when there is uncertainty and there is volatility, how do I ensure that my people on the ground are supported? So there is high level of localized distribution and that intelligence How do I ensure that there is asset liability kind of a match in terms of how do I use my liabilities best? And then in terms of ensuring that there is data-based, more intelligent usage of risk underwriting, right? So I think broadly speaking, this is the way one would kind of look at it, and that is where we are.
Okay. Interesting. Alokji?
Amol, is difficult to add anything after the three veterans have spoken. So I'll borrow from each. Actually, what I heard is 3 R's here, like the RRR. One is resilience.
Okay.
How do we build resilience in the business we have? Second is how do we remain relevant? It's more important for some specific categories like us, and SMFC also said about the same thing. And third is reach. In our market, how do we reach to the right customer? Because from our perspective, we are still just started, we're just growing. So how do I reach to my relevant customers? So these 3 R's, but recalibrating all 3.
Right.
That's the real job. How do you keep on recalibrating all the 3 models? Because all the 3s are simultaneously working at the same time. It's not one or the other.
Okay. Sure, you're saying RRR. Somebody in the audience, one of the good friend banker was saying, you have Dhurandhar panel. So interesting thoughts here. So Ankur, what's your view? Let me tweak the question, not the priorities one, but since you're catering to the customer experience part, right? How do you think the whole technology aspect is changing specifically for the customer experience in the BFSI world?
Yeah, I think even the previous question that you asked about these times, right? If you see, lots of these events are happening and you can't predict what kind of stress or tensions a customer is going through generally in their life. So if you have to prepare for that, and if you become the easiest bank to bank with, that is a big deal, right? So from an experience point of view, with AI coming in and technology coming in, I think as of today, all the banks are feature-led. So we have hundreds and hundreds of features, and in fact, 80% of everything that bank offers is available online. Right. But the customer actually only uses 5. And that's because we are feature-led. The customer is not feature-led. They are not thinking about features. They are thinking about their tasks in life, right? Understood. So if we become intent-led, that we try to understand intent from a trigger point or a chat or anything like that, and we build the whole experience around that, I think we will drive a lot of adoption and a lot of customer satisfaction.
Okay. Noted your points. Intent part, I think sounds good. Let me get into few more specific questions, and Rajivji, I will start with you. When we look at the current macroeconomic factors, the whole face value of India and the Indian economy looks really great. 6 to 7% of GDP, more than 200 lakh crores of GST collections, inflation under control, and all the parameters were great. But when you look at the corporate growth, still the wholesale banking or the private capex is, I'm not saying completely down, but it's minimal and we expect more growth that side. In fact, it's in still pockets. So in your view, sir, how do you see the whole credit line, the corporate credit line maybe in next 2 to 3 years? Do you think it will remain in the same way it is today, or you will see the pickup on that side? Because if that picks up, that will boost the economy to the next level.
I used to be a corporate banker before this, and every year for the last 5 years, or I don't know, maybe 10 years, I've been hearing this question of when will CapEx start? Let's think of it slightly differently. Is there any shortages of any goods and services in this country? The answer is no. There's ample supply of cement, steel, petroleum, whatever else, which means that there is adequate capacity to support a 7% economy at this point in time, right? Despite the fact that capacity utilizations are at 75-80%, people are able to get more and more efficient to be able to meet the demands that we are seeing at this point in time. Second is that the composition of the economy is changing. It is getting more and more services led. So the Zomatos of the world do not require private capex. They require more people on bikes and scooters and to be able to run around, and you're able to see that two-wheeler sales are very strong. Right? And on the third part is that in this, probably this generation, this is the best that corporate balance sheets are in.
Okay.
Debt EBITDA is about 0.5%, meaning that not just the fact that there is very little leverage on corporate balance sheets, but the fact that they're generating so much of cash flow, they're able to meet their capex demand on their own. And they don't necessarily need to borrow from banks or the markets or whatever else. And even if you do talk about the markets, I mean, if you look at the capital structure, there is so much of equity that is available. People are able to, happily raise money, through QIPs and what have you. There is enough money globally, there is enough money locally, and with banks.
Okay.
And so therefore, to that extent, I think there is a adequate amount of private capex that is happening. If there is significantly greater levels of demand over and above what we are seeing today, then maybe over a period of time we'll perhaps see it. But I think this obsession with when will private capex happen, I think we need to get out of. We should worry about the fact that people are not investing in private capex only if we think that there is runaway inflation on one side, which means that there is shortages here and there of goods and services. We are not seeing either. Right. There is no shortages, and inflation is well under control. So capex hoga jab hoga, boss. Nothing to worry.
Okay, that's a very unique and unusual perspective. Noted that. Thank you for adding that. Mr. Ghosh, the important question specifically on the MSME is, now people talk about the 30 lakh crore of credit gap. I think since last many years, more than a decade at least, we have been talking about the gap specifically in the microfinance and MSME space, right? But at the same time, the government had also infused a guarantee of 20 lakh crore earlier during pandemic, and banks and many other financial institutions are trying to support this segment since really long. Even after doing this, where do you see the major gap, or what is going wrong specifically the MSMEs? And if you could add more into it in terms of how do you think this will rectify in the future?
I'm coming on that, the microfinance first, then next part on that. Normally, microcredit is not the transactional credit. It is a credit for the livelihood. If we think in a microcredit is a transactional credit, then we are missing many things on that. So when you go to this, the customer segment of micro, they are majorly in a rural, and then is an urban and semi-urban. And who are in the microcredit segment, this customer, they have not any that such of the documents which can be like to prove it, they are eligible to get the credit or not. If I give my example, when I started in a 25 years before as an NGO, the all bank refused my proposal because I have not any papers on that. Right. So it is not there is a credit rating or everything as a zero, the credit option. So in that sense, we'll be like to come out of the box to thinking about it, how we can be like to give the credit access to them. And then it will be like to more people will become under the credit, and they will be like to build up their enterprise, they will create the job, and that will be like to more economy contribution will be like to better on that.
Okay.
Next, my point on that, the 3-4 things we can be like to focus on that for microcredit part on this. First, the point on that, if we think that we'll be focused on that rural semi-urban areas more in a microcredit, then industry can grow and people can get benefit, and of course it will be like to will be become an entrepreneur. They also itself create a job for the others. Second point on that, the first will be identify what enterprise they have, what livelihood they are running, and where I like to give the credit on that. Okay. So if there is no livelihood, then it will be go to this consumption credit. Then automatically it will be like to disturb on that to the credit system. And third, my point on that, collection mechanism is a very important for this. Collection mechanism will be doorstep, group meeting, where we can understand the pulse of the customer, and accordingly we enhance or not enhance, will be reduced. That depend on that. So it is not in a like in the QR code and given that the application and automatically money will come on this account. This is not the microcredit. We like to coming from the basic microcredit to the another type of microcredit on that. So I hope that can be like to focus on that. Then huge opportunities of that in our country. We can be like to grow on that. If I say that the one NGO started 25 years before, now after the 25 years, 60,000 crores for microcredit. Not only that, I am focusing on that microcredit is not the balance sheet size. We like to see that how much of the customer or people we have been reached to give these services. If you say that our bank is a 3.5 crores customer, 2 crores are women. These 2 crores are microcredit customer. So we should be like to focus how many customer we have been reached and given this service, not the balance sheet size. That can be like to better way, microcredit grow, people will get the benefit, and country also like to benefit. Second, my point on that, when you were coming on the MSME, MSME is a very important for Indian economy. My earlier is a micro and MSME. If we like to see that our objective of the country now 2047 is the Viksit Bharat, and if we like to reach the Viksit Bharat, we'll be like to focus on that MSME segment. Where is it we get the opportunity to build up the entrepreneur, create the job, and the local income will be like to enhance. If this is the 3 combination will be help on that, that will become on that, the economic growth and reaching to the Viksit Bharat. So that the credit system will be like to different segment to the different segment. If you say that the earlier we have been talked and as I mentioned of the corporate, as whatever that the credit system of the structure, sanctioning credit and disbursement credit, it cannot be totally applicable for micro or MSME. We should be like to match as per the customer background and customer whatever doing on that. MSME, another point I mentioned, not maybe like to the country perspective, one of the state perspective, I say that earlier one, specifically West Bengal state have been declared 10 years before, the MSME will be get the incentive. There is an incentive scheme is there. They all are encouraged this incentive, how they can be like to attract, get the opportunities to build up their business. If they build up the business, the 1 year before government suddenly decided and declared on that will not give this incentive. Last 7 years, whatever the MSME are booked this as a provision, they will get that money as an incentive and declared as a suddenly the incentive will not given and they are the loss booked. So that should not be like to make that type of policy. If we like to make the policy by the government, will we give this amount, they must be given that. That cannot be like to retrospective declare about it, they will not give it on that. So I say that the incentive also encourage the MSME segment, how they will like to come forward to growth of this MSME, and it will be help to the Indian economy on that.
Right.
Thank you.
Yeah. Noted your points. Mr. Ghosh has a soft corner for microcredit and he can go on, give a lot of details. Always enjoyed his talks on this particular topic. Thanks for adding that, sir. Mr. Ravi, Mr. Ghosh spoke about microcredit, and there is one big area in India which is underserved and unserved, which I think with the emergence of a lot of new NBFCs and fintech companies started, catering to. I still remember my conversation with former chairman of SBI who said that when we were asking about secured and non-secured books, he said my non-secured books or unsecured book is far stronger than even a secured loan book, right? Now you are catering to this segment. So my question to you is, how are you evaluating underserved and new to credit customers, what kind of opportunities do you specifically see in this domain?
Thanks, Amol. I think in the spirit of continuation of what Ghosh Saab just said, I think it's a very huge social responsibility that the BFSI sector carries in terms of our responsibilities towards this particular underserved segment, and it's very, very vast in our country. Today, if you were to look at the Trans Union Civil report of Q4, if I'm not mistaken, the new to credit itself is about 13-14%, right, by the in terms of the financial intermediation. Now that's big. Now what does it say? It says that those who are credit invisible are not credit unworthy, right? I think that's something which is very important for all of us to understand. And I'll amplify the point which Ghosh Saab said, that microcredit is not transactional, but it is livelihood. And that is what we see in terms of how we are looking at underserved segment. For example, what is it that the underserved segment consists of? It is formalization of rural credit, broadly speaking, or maybe just outside urban centers. Second would be in terms of entrepreneurship of, let's say, micro or local rural youth. Third would be in terms of women enterprises, or what we call as household enterprises. And therefore, even more important is the question that you had a subsegment of, this difference between unsecured and secured. So if you were to look at, let's say, just housing as an example, in a tier 3 segment, a house is not an investment. It is an asset creation, right? So when we talk of underserved, we have to understand that in terms of the way we are looking at connecting with these customers is to ensure that there is localized intelligence. There is now a preponderance of data. For example, in different states, they are digitizing the land records, they are digitizing even the milch farming. So I have an understanding of how much of dairy products are being produced every day, how much of milk is being collected every day. And these kind of data-based intelligent risk underwriting. And then finally, of course, how do I ensure that there is a conscious and balanced mix of what I do with the underserved segment in terms of catering to their immediacy of requirement in terms of an unsecured option and their mid-term to long-term preparation or planning in terms of the secured business. At the same time, even in mortgages is where we have to focus on in terms of the fact that even rural areas where there is ability to provide a property as a collateral, the understanding of how to do that thin file underwriting is much better today compared to what it used to be earlier. Because my understanding of that property, information about that property, and the ability to draw from the local state or talati, inputs about the property and ownership of the property is very strong. So broadly speaking, our approach towards new to credit is in terms of the fact that can we continue to understand them better through local market intelligence, my distribution, my ability to touch them better. And in terms of the underserved segment is to understand how do I create opportunities to help them move up in the pyramid of livelihood.
That was realistic one, meaningful one, Mr. Ravi. Let me move my focus to insurance now. So Alok, I think it's been 25 years almost for insurance companies, specifically the private insurance companies. And I think we are slightly seeing an interesting rally after 100% FDI. Most of the companies are in negotiations and talks to increase their stake and everything. But all these years we were talking about why the penetration is low, why the penetration is not increasing. How do you see the future of insurance companies specifically after 25 years and 100% FDI? What kind of changes do you see in this particular business now?
Yeah, Amol, it's a big milestone in the journey of privatization or open economy. While we started in 1990, insurance opened in 2000. But I think there were reminiscences of the way insurance was done in the past. So there was a very cautious approach when they opened. So, the foreign participation was always limited. It started with 24, then moved to 49, then 74. So the good thing is now, as a country, we believe we have the structure in place. We have everything which we believe is okay that a 100% FDI company comes in India and the way they operates. Because the problem in this business is the fiduciary responsibility. You are dealing with retail business money, you're dealing with people's hard-earned income. So you want to ensure that people come with the right intent, customer interest is always kept in the forefront. So I think as a country, we have that clarity now, how to run a 100% FDI segment in life insurance. So I think that's a great point. And you're right, as soon as that has been announced and put into use, we saw 8-9 companies, some who have converted their current holding to 100%. Some have applied for licenses. Still I see licenses are coming in JV, but the current incumbent who had experience are converting it to 100%. So if you look at all that, what's happening, and as you said, there are discussions happening, there are 2-3 takeaways for us is, obviously people see value in this business in the long run.
Okay.
Second, please appreciate and understand, people who are coming into India are people who have run this business for hundreds of years. This is not a short-term business, it's a long-term business. They have seen and experienced markets. They have seen and experienced this business for longer duration. So when someone who has run this business for long and have experience in various markets, they enter India, I think it's a great sign for India, that they see that this market is there for all of them. It's not only 1 or 2 coming, there are a lot of people coming. And they still believe that there is immense opportunity. So I think that's a big plus for the segment. There is a big positive towards the segment, which experienced people are saying, right? Also, it was getting bottleneck with domestic people participating a lot. So I think that's also decoupling the capital needs of the market. And on the other hand, there is a lot of data to say so. If you look at the latest Swiss report, it is saying in real terms for the next 15 years, the market will grow at 7%. In nominal terms, anyway, the GDP is growing at 12-13, so insurance has been growing at 15%. So I think, and then we keep on talking, especially on the life side, there is a protection gap, so, which is like 85%. So all this data also says there is a lot to do. Look on the real economy side, like all the banking champions are saying, or the credit side is saying, if the economy is supposed to double, triple, quadruple, you need all the risk being supported. So insurance is also something which the entrepreneur looks at. If I'm taking risk, how do I manage my risk, mitigate my risk, or how does it enable us to take more risk? So it's also popular in terms of entrepreneurship. It also popular in terms of can growth be assisted with the right risk management framework? And are there tools in the country, enough tools I'm saying, to do some risk management on known risk? Okay. I think that's where people are saying it is a growing economy. There's a lot of entrepreneurship coming. We keep on saying we have not even reached to the last surface. We are scratching the surface in the country on insurance. With all this micro credits and small credits, we become a rider on it also. So look at that part also. So we complement growth also, credit growth also. Look at the latest number, 19% growth rate is coming. Passenger sales have been 30 plus number which came last week. So I'm saying these are all great signs for people to see how we can co-partner the growth and how do we really work on providing the risk framework. So that's where people see value, I think. And there's a much to achieve than what we have done so far.
Okay. Yeah, so I have more questions, but we'll take a pause here and we'll add on that opportunity part in next round, Alok. But Ankur, my question to you is specifically on the AI and the AI in economics. Every BFSI company is investing in AI far more aggressively. Every institution is investing in artificial intelligence. So where do you see AI creating a measurable business value in banking, financial services sector than remaining an experiment now?
Yeah, I think over the last 15 years, if you see, all banks have invested heavily in technology. So all the digital transformation technology systems are available. But like I said before, adoption is very low. Most of us sitting here use not more than 5 features from a bank's digital solutions book, right? And that's because we've not been able to bridge the gap between customers' behavior and intent and our capability. The capability is there, just that we've not been able to bridge the gap. I'll give you a very quick example. Let's say you are going for a trip to Japan, right? So usually you would buy travel insurance, you would buy Forex or a Forex card, you would go and turn on and off your credit card controls for your international trip, right? And you'd also update your phone number so that if you have a problem, you can actually get your OTP and all there, right? Now, all of these are individual capabilities that a bank has, and they provide them. But for a customer to do all of this, they have to go into 4 or 5 different sections and do all of these one by one, which no one ever ends up doing. Their intent actually is they are going for a trip to Japan. So let's say they come to your app, and how do you know they are even going, right? They come to your app to turn on or off their international transaction limit. That is the trigger. If you pick up, you understand the intent, and you can dynamically with AI create a journey on a single screen which offers them card controls, a Forex, and also tells them one of their own cards actually has a Forex, which is only 1% fee on that, and one of their own cards has a medical insurance as well. So all of these in one step, in one go, you can build a dynamic journey like that. So that way, if you're going to do that, you are actually going to be able to measure whether they took that Forex card from you or not. And if you measure the same person after offering this in the previous year, whether they took a new product from you or not, you will see the difference there. So I think it has to affect either of the two, revenue or cost to serve. And if you are able to bridge this gap, I think you can affect either or from these AI solutions. And that's what most of the large technology companies in the world are doing. You don't even know they are using AI, right? You're in Google Maps, we've all been using, but whoever thought that what's behind the solution?
Okay, I think there are many thoughts I have, but let me try and see how much I can add little later. So Rajivji, let me come back to you again. And there are different terms in this world now. Europe is using challenger banks. We are trying to become a digital banks. Somebody wants to have AI only banks. Now you have a great experience of banking. How do you see the whole banking maybe in next 2 to 3 years? How do the future of banks look like from India perspective? Because Gen Z wants app-only banks, senior citizens wants branch-only banks, and different banks, different people are looking for. So what is your view as a chief of the bank that you see specifically in the future?
I think what you've heard over the last 30 minutes or so is basically that there are different types of customers, which is why banks provide a multi-channel experience. While all of us have gone more and more digital, all of us are using UPI significantly more, it is not as if there has been a material change in the number of transactions we are doing on the ATM, which means people are still withdrawing money in cash from the ATM. There has been some reduction in the number of footfalls in the branches, but it is not as if branches have become empty. And similarly, all of us continue to get calls at our call center and go to our internet banking and so on and so forth. Customers ultimately choose one of these approaches, and intuitively or through experience, you begin to realize that when there is a here and now problem, they will call the call center. If they want to, if there is a little more complex transaction, they want to discuss a home loan or they want to buy insurance, they will come to the branch or meet their RM. Obviously, to withdraw money, they will use the ATMs, and more people are using the mobile application for day-to-day transactions, pay bills, P2M, P2P, etc., etc. So I don't think we've come to a stage where we are saying that we will shut down branches or will shut down the call center because everybody is going to use the mobile app or everybody is going to be so AI driven through conversational banking. But having said that, I think AI gives us the capability to deliver a very, very differentiated omni-channel experience across all these channels and individually at each of these channels. And I think I love the great example of personalized banking that Ankur spoke about. And I think we can, there are multiple, such experiences that we can deliver. Maybe we are not delivering today because of the fact that we are not thinking this through effectively, or maybe some of these we will be able to do thanks to AI. Once you come to the call center or come to the mobile app and so on and so forth. So I think the experience of banking will remain more or less the same. I mean, obviously, we've been doing the same thing for 500 years, which is basically raising deposits and lending money on the other side. But the way that we're able to deliver this has changed over the last few decades, from branch to ATMs to internet banking to mobile banking. And I think we will continue to see a process of evolution, not a process of revolution, in this experience. Meaning that all of us will embed much more to be able to deliver a differentiated customer experience or a differentiated journey through the use of AI, which hitherto we have not been able to.
It's a deep thought and a meaningful thought, not a revolution but an evolution. Interesting one, Rajivji. Ghosh sir, let me come back to you. You give a very unusual perspective on microcredit, but the world is talking a lot about small businesses, and while large businesses have their own challenges, we expect a lot of small businesses will pick up. What kind of opportunities do you see specifically for banks specifically from the small businesses going ahead as this particular segment is growing up rapidly?
Of course, again, I repeat on that, there is a lot of opportunities of India. And it is very needed also to reach to this, the small business to give the credit services. If you see that the microcredit sector started as an NGO, and now this industry has the 3.5 lakh crores has come. And if you go to this, the same way started the housing finance company. Now it is more than microcredit, but this housing finance company started as a niche NBFC. Microcredit also niche NBFC. I hope that the small credit is need our country as a niche. Some of NBFC sector should develop. Then it can be like to understand very clearly what is happening in the ground level, and that will be like to future bank also attract on that. If we see that the microfinance has now abandoned as a bank, and a small SFB has come as a bank, and many banks have been buy also microcredit organization. Housing finance also buy the bank. So that in that sense, if we like to clearly focus on that, only the small business couple of NBFC grown, and they are like to build up on that, the book, and that very, very big opportunities is there. Once upon a time, it will be like to attract by the bank, and bank also like to focus on that. So bank cannot be like to tested model on that. So tested by the others, and bank will be buy on that. So I hope that there are a lot of opportunities in a small businesses segment, and especially in semi-urban and rural areas more. And because of the behavior of the customer are changing, automatically people's demand also changing on that. And that demand fulfilled by the small business on that. They have the one big challenge now. We are looking in the ground level. Major of this, the district and sub-district level, lot of the mall are now setting on that. When the mall setting, this is small business, all are suffering to get the customer. Their customer is shifted some percentage to the mall, and they are also facing the competition from the retail store or mall. So we should be like to build up how they also like to get the access of the source of their product which is a cost will be like to better at the low, and they also like to compete with this, the retail store by the digital selling on that. I hope that some challenge is there. I saw that, but opportunities is more. If bank or NBFC like to give a niche focus on this segment, then it will be like to more benefited to the country.
I certainly wish I would have more time and understand the challenges part also. But one thing is sure that even economists are far more aggressive in the small businesses. One of the economists recently told me that, a lot of luxury salons and spas are also there in tier 3 and tier 4 cities, which shows that there is some kind of growth there. Noted your points, Ghosh sir. Ravi, my question is specifically on the housing part now, that is one layer that the NBFC business has. I think housing demand specifically is in pockets for every NBFC and even housing finance companies. So how do you see the whole housing segment playbook will be for the future? What kind of growth do you see in that segment specifically from your perspective?
Yeah, so first I think there is this so-called urban myth that there is stagnation in the housing market, right? Let me dispel that by saying that the housing growth has not evaporated, but it has kind of migrated, right? And you will typically see people now talking of premium housing, or ultra premium housing or higher ticket housing, right? And that is true. And that is the migration that is happening in the housing market. For example, in 2018, the less than or sub 50 lakh launches was about 52%. And in 2025, that has come down to about 17 odd percent. Now that's a huge shift. And this shift is what defining how the housing market is behaving, right? What does it mean? It means that there is a huge opportunity in tier 2, tier 3 or just outside urban markets, right? Because that is where we want to ensure that people are able to create assets for themselves in the medium to long term. So SMHFC, which is the step down 100% affordable housing finance company called Griha Shakti that we have, and it's a large 13,000 crore AUM book. And I think in terms of what we are trying to do is not to chase the PIN code, but chase the customer. Okay. And therefore in tier 3, tier 4 or tier 2 areas, this opportunity is very apparent to us in terms of how we can cater to affordable housing finance. Second is in terms of the fact that how do I look at doing credit for these customers? And this credit for customers is based on possible surrogates, possible understanding of cash flows in those markets, and therefore the local distribution intelligence that I talked of earlier. And broadly speaking, I think the housing market is available for us in terms of the growth opportunity which is there. I mean, in the larger sense of the housing market, from a 35, 38 crore, lakh crore, at this point in time, in 2030, it is projected to double to about 75, 80 lakh crore, which means that the opportunity in the tier 2, tier 3 markets is a white space available for companies which can responsibly underwrite and which can diligently track through on a data-based, market intelligence-based underwriting approaches.
Sure, noted your points. It shows the growth specifically in that area. So, Alok, I think I have one more question specifically on the commission part. We spoke about, the growth and, how after 100% FDI, the opportunities will be there. But, दुखती नस पे हाथ रखने की बात है whenever it comes to the commission part, right? And we are going to see a lot of changes in the commission structure of the insurance. So if commission economics change materially, where does the industry expect the adjustment to happen? Product pricing, distribution, numeration, customer acquisition, or margins?
say Amol, there are three stakeholders in all the cost, right? There is a distribution cost, which is acquisition built. There is a customer expectation, and definitely there is an ROI the shareholder also looks at, right? I have always said, whenever there is a reset happening in the market, and this is not the first time. If you look at in the last 4 or 5 years, we had to reset for GST. The industry absorbed 14,000 crore annual cost based on last year's number. We had a reset when EUM happened. We have a reset when surrender charges changed, right? So there are significant reset which has happened in the last 3 or 4 years. This is going to be another reset. So let's appreciate your point that it is significant. Whenever a reset is happening, I think all three stakeholders will have to share the burden or the benefit. Benefit in the sense, if distribution cost comes down, can the customer get a better IRR? Why not? Right? Because the cost of doing business has come down, right? So my point is, all three components will have an equal, or depending on how do you look at, some product can be more attractive, some product will be different. That reset is going to be a time-consuming reset because you will have to revisit your pricing assumptions, you have to revisit your cost of doing business. So this is a significant reset. Now also depends what is the magnitude of reset the regulator is bringing in, because I think they have also come a long way from what was initially thought to what I hear now in some forums, that they have realized that there are different type of distributors in the market. There is an effort which each type of distributor has to put in. They have realized that there is a quality of business important in the cost of distribution. So depending on how ultimately the regulations or draft regulations come in, the reset will be different. In terms of agency, you have 10 lakh agents. What you will do with their livelihood? How much can you really touch their livelihood in this kind of a situation where there is so much volatility in the earning capacity of individuals? There has been some discussion with the banking partners. Then if there is an effort discussion that are they really spending money on acquisition, or this is a cross-sell tool. Then there is a broking segment, which is a mix of both, where they acquire customers, or if many DSAs are customer, then again it's a cross-sell tool. So I think there is some realization in the regulatory body that it's not one size fit all. So you can't just say we'll do broad brush reduction of distribution to reduce cost of acquisition, which is a great sign, I think so. And then the second realization that there is a quality parameter they want to put in.
Okay.
So see, some of this will shake up. It will take time, but the only thing, if you look at last 4 years, as I said, there are 4 big changes happened. Initially, there is a blip which will happen. Industry will have to reset, so there will be a slowdown. But I've seen an hockey stick approach that you come back and you come back big. So last year, this time of the year, we were down in first quarter, but we ended handsomely in the year-end numbers. If you see, the growth was at 12%. So that's how I look. This may be 2-quarter issue or 3-quarter issue. But then in long run, if the trio is managed well, it should be okay.
So you said industry reset, thrice in your comment. Does that mean the premium will increase? Premium prices badenge?
If cost goes down, there is no reason for price to go up. See, that's the basic fundamental. If distribution cost goes down, price have to go down. The point you said is how much who will bear, and I said it's not that everything will go to customer. There will be a balance act which has to be done.
Yeah, sure. So Ankur, picking up from last point that you said specifically about intent, using better use of AI, one part you also mentioned that perhaps the BFSI companies have too much of technology, but they are not using it aggressively. If going ahead, banks, BFSI companies has to make most of AI, what are the 1 or 2 things that they should do according to you, specifically to boost the customer experience?
Yeah, I think I'll go back to saying that understanding intent. Everyone was talking about credit, right, and thin file customers. I am born in a tier 3 rural part of the country, also lived in a couple of first world countries. I think what I've seen is that India is fascinating with the type of customers that Rajiv sir was saying and the number of challenges therefore. I think in all of this, if you talk about the thin file customers, I know back in my village, I know what people are scared of. They are scared of, they have a fear that will they even qualify for this loan. They are not scared of kitna milega, kitna nahi milega. They have heard about this particular loan from someone in the neighborhood, and they have gotten rejected. Someone has already said, "Aapko to nahi mil sakta." So that's the starting point. If that's the starting point, then your next answer in your journey is not OTP and phone number and rate. It's like we will come and explain the whole process to you. So if you just, technology is so good right now, and everyone, mind you, is digitally ready. If the parent is not digitally ready there, the children are, and they will help you use that technology. So everyone is digitally ready. I think there's tremendous opportunity to use technology to become human again. Like banking was always personal. You'd go to a branch, sit down there, talk to the person there. 3 people are sitting there. They'll solve your problem. You go back home. But in the last 15 years of digital, I think banking became transactional because you don't know the customer very well. You know their data, but you don't know them personally too well. So I think we can become personal again with technology coming up and really being useful to the customer.
Sure, Ankur. Thank you so much. I think truly meaningful insights from all the panelists here. I found it really meaningful and joyful. Thank you so much for sharing those meaningful thoughts here. The time is up. Wish I could have taken more questions and some questions from you as well. But I think I had my own more questions here. But thank you so much once again, Rajivji, Ghosh sir, Ravi, Alok, and Ankur for sharing those insights. Thank you.